Happy Friday, traders. It's 8 a.m. Chicago time on the 4th of September, 2020. It's non-farm payrolls day. This is episode number 1834. Thanks for joining me today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is in a mixed stance. We do have the Russell up popping higher, up 1.25% on settlement, up 19.3 points. Small caps getting a little bit of love today. The Nasdaq, the Dow's up 151 points or 0.53%. The Euro Stock's up 0.52%. The dollar catching a pop of $19.15. The dollar's trading at 92.93 even. And the DAX is up 27 points or 0.21%. The S&P is trading at 34.66, up 4.5 points versus yesterday's settlement, just slightly higher. And the Nasdaq still taking a bit of a drop here. The Nasdaq put in a lower low to yesterday and is weakest down 109 points, 109.5 points or 0.93%. The bonds are off an entire handle and 8 ticks, which is interesting. So what we have is a mixed bunch here. Can you guys hear me? Can you verify that I'm live? YouTube changed things around yet again with this new streaming service. Am I live? All right, thank you. Sorry, yeah, there's a delay there. It's the delay stinks. In any case, the non-farm payrolls came in this morning at 1.371 million. 1.371 million jobs added in August versus the expected 1.49 million. So it came in slightly weaker. The forecast for unemployment was expected at 9.9%, which is way off. Came in at 8.4%, much better. That's really it. That wraps up the day. We did get unemployment out of Canada as well, but it wraps up the day or the session in terms of news. So that's where we stand. So we have a mixed to slight allocation to risk this morning. The safety assets are all down, but not by much. And we don't have much in front of us yet going forward. The big thing to remember is that Monday is Labor Day. It'll be the first Monday of September, which is Labor Day here. It's a holiday. The markets will be open on a part session. I will not be here on Monday. I'm off on Monday, and it sets off the fall term going into a Q3 here. So that's where we stand. Let's take a look at what was expected yesterday versus what we got. And of course, it's really hard to predict the kind of drop that we had. Yesterday took back, although it was a lot of range, 162 points in the full session yesterday in range. The expectation yesterday was for a drift higher and was looking for a drift higher to 65, 35, 65, and I was looking for a drop. Everything was the narrative was pointing to a weak market, and the expectation is we would pull back to this high volume node and take a ride down for a bounce into the close. Of course, I kept it within range of the prior day because the prior day's range was quite wide on what turned out to be a strong rally day. So what we had was a strong rally day and a reversal, almost like a V bottom. and we ended up taking back the prior day. We ended up taking back 5 more days, but really we've only covered about a week's worth of gains in the S&P. Remember, the S&P has been pushing higher and higher and higher every day. It seems like it's a crash or whatever, and the bears are jumping up and down and having a party. But it's nice to see a two-way market, and we did clear a few weak structures below in terms of the auction structure. But overall, we didn't cover that much territory. So yesterday, I was looking for a sell-off, but I wasn't looking for it to drop that far, obviously. The catalyst for yesterday's sell-off is unknown to me. Here's what actually happened. We opened just a little bit below where it was during the trader bite. It really made a very weak attempt higher, and straight down it went. Some really good trading opportunities yesterday, but note something. As the market dropped, look at that delta. What is the delta doing there? As the market dropped, the delta was rising. Once that initial bottom at 34.51 was put in, this entire grind down was showing a positive delta. We are currently trading up here. The overnight high, let me verify that. The overnight high was 84 and a quarter. So the overnight high was up here, is up here for the session. But interestingly, this is a 15-minute bar chart just to be able to see the entire range. And if we pull back and look at what we've covered, we've basically gone back to last Wednesday's range. We did tag actually last Tuesday's range. We did tag this naked point of control on Tuesday, the 25th of August. And took a pretty big bounce there. We took about a 45-point bounce into the close, pretty decent bounce there. But overall, the delta is rising on this drop once the low is put in, the equivalent of this 51 quarter area. The key areas to pay attention to above 3504 and a quarter remains quite large around the 3500 century figure. We also have a single print at 3502.50 above, and that area has a lot going on there at 3504. Beneath us, 3370 is a big one, 3370. And 3340, I think it's 3371 is the MC point of control. I'll show you the composite so you can take a look at that. But overall, pretty healthy sell-off. Leaves us with an internal gap up top. We don't often see a market that puts in a rally high and turns into a rally the next day in the opposite direction. We've seen it at the bottom. We've seen the market sell off strong and then have a rally day that takes all of it back. We've seen a lot of that this year, but the overall setup yesterday was a little bit odd. Okay, the market's got some jitters, and it sold off a little bit. This is my trigger chart, normally a 4-tick Renko, but in order to see what the action was during the day, I switched it to 15 minutes and it's going back to 4-tick Renko in prep for trading this morning. This is what this chart normally looks like. Delta is positive. Overall, this is the full session. The overnight session, heavy volume, 461,000, about 3 to 3.5 times what we've been seeing, the norm. We've got the point of control at 34.51. The market has been holding some pretty decent structure this morning on these trend lines. It broke higher, pulled back, and is bouncing up. The market sold off slightly on the non-farm payrolls and has rallied since on pretty decent volume. We still have we're still kind of stuck in this big structure here in the overnight session, and we are in this big distribution from yesterday. Essentially, yesterday's point of control at 34.55, just below us. We're trading at 65.50 currently. The overnight inventory is mixed to slightly short because a lot of it occurred below yesterday's close, with the delta being positive and trending up. That's the stance that we're in. Once we get above the 3,500, the 3497 to 3500, the only thing we need to watch out for is 3504 and a quarter. Once we clear at the 3504 and a quarter, we pretty much make a beeline through some of the key areas up top. We start to look for 25 and so on and so forth. So that's where we stand this morning. I want to take a moment here and show you the composite chart. This chart here, each bar is the RTH session. This chart just plots out what the overall picture is. Each box represents a week, and they alternate between dark and light gray for month to month. So you can see September started right here, August was right here, and so on and so forth. The micro composite that I have up here starts at the beginning of August on the gap up, and you can see that there are several key points of control, key high volume nodes. The one that I talked about, 3504, that's this one right here. The big one is 3371 below, 3371 below. Yesterday we did not get down into the open gap at 3396 and a quarter. That remains a weak structure below us, and overall we have taken back about a week's worth of range, a week and a half's worth of range. Basically, we went back to the point of control of this day here. So yes, we did that all in a day, and you could see that the range was very high, volume was very high yesterday, but overall this was a little kind of adjustment on what has been a rip-roaring move up. So don't start thinking, okay, I need to get ready to really hit the shorts hard going forward. Just read the price action. This is a minor blip in the overall trend. We did hit the 20 period SMA yesterday. We didn't hit it. It's a 34.22. We got to 24 and a half. This is still in a healthy uptrend. What we did is we broke the one-time framing on the daily. But here's the important thing to observe about this chart. With each box representing a week, there's the low of last week. There's the low yesterday. The weekly still has a one-time framing up intact. And so the number to pay attention to this morning, if we do sell off, is 3409 and a half. 3409 and a half is key below. It ends the one-time framing up on the weekly, and it brings us into, it puts 3371 in range, and we are likely to, and that becomes a key target to catch a short, driving into 3371 below. If it does break through the gap here between 09 half, 3409 half, and 3396 and a quarter, giving us about 30 points of range if we catch it. So that's that. Let's take a look at what's expected for today. Okay, so there's a lot going on this chart. So here's what I'm expecting for today. We did have non-farm payrolls. It is a major release, and the market didn't really move all that much in response. We do have a holiday coming in. We did have a sell-off yesterday, kind of setting off September for us. be conservative today with your expectations. It is a Friday before a holiday on non-farm payroll day. I'm expecting the open to be somewhat jittery, so there may be a little bit of volatility there, but the expectation is it's likely to temper down and go sideways for the session. Above us, there's a little bit of resistance here that we hit. Below us, this weak low that we put in against the trend line, right down in this 47 area. These are kind of the outlines of the range that is probably going to be noisy. This puts us in the point of control, the high volume node, and the point of control of yesterday. So this area, this region between 71 and 44, this is where we are. We are currently at 67. This range in between here is likely to be quite noisy. This encompasses the overnight point of control, the prior day's point of control, and if we open here and push lower and consolidate in here, I would advise you to keep your hands off the mouse, the keyboard, whatever you're using, joystick. um, just it's probably not a good. It's probably not going to be a good trade in here. It's likely to be a scalper's paradise, a high frequency scalping kind of back and forth. That's what I'm expecting between 44.71. That is a wide range, 27 points. But this area is likely to be noisy. Pretty good chop zone, and expecting that to kind of play for some time today. If we break higher, and it's hard for me to tell which side, I'm expecting that we are likely to break higher on scenario one. If we break higher, we are likely to consolidate and build build the base for a push to 35.04 and a quarter before we level out. So maybe a grind up on the session, and 35.04 becomes oh 04 quarter, 04.50. This area right here has got a lot going on in there. That would be the key target above, giving us from where we are now, giving us about 40 to 45 points of range. The secondary scenario is the opposite in that we trade, we push higher, we're unable, we see a reversion back to yesterday's close, consolidated yesterday's close, consolidated yesterday's point of control, tag the overnight point of control, and then start to walk ourselves down lower in a pretty choppy mode. So this would be the continuation of the impulse down if the market is so inclined, and then that puts us in range of that 3409, the top of the gap zone. And if it doesn't hold, then 3396 becomes the next key area down. I'm not expecting a trend down today. I really don't see that happening, given how this was well supported and the way we have put in V bottoms and popped higher every time. I'm not expecting very much here in terms of a sell-off. However, the primary scenario is very much on the cards, and it could very well push to 35.04 and a quarter. Those are the key areas that I'm looking at. Again, above us, there's quite a bit of volume. Quite a bit of there's a fair amount of volume. Below us, there's a fair amount of volume. In between where we are right now, not so much. Let's take a look again at the composite, just as a refresher. If I combine these two profiles, where we are and where we've been, if we combine these two profiles, let me switch this around a little bit. So we're going to make it 100%, and we are going to make it a volume shading We'll make it gold for all those gold bugs. So if we look at this profile, there's a fair amount going on. There's a fair amount going on beneath us. There's a fair amount going on above us. Again, the 3504. We've got a little bit here in this 89, 90 area, but then where we are now is this kind of dip all the way down below, and then we start to get into this big 3371. So overall, it's, you look at this profile, it doesn't have much in it in this region until you push into the 3371. So to me, it just seems like we are likely to drift around today, push up, more likely push up than down. Look for a little bit of resistance at the 3491 area with a target of 3504. That's what's expected for today. Okay, good luck, and I'll catch you on Tuesday. Look up. I look forward to speaking with you, but also make sure you remain conservative going into the holiday weekend. It's going to, those of you who missed moves or lost money yesterday, don't try to make up for it today. Just trade what's in front of you. Good luck, and I'll catch you on Tuesday. Take care.